morning and welcome to BVTV. I'm with Chris Clemmow, who's responsible for global investment grade corporate bond trading at M&G Investments. Chris, welcome.
Morning, thank you.
Trump 2017, obviously the topic of choice for many out there. How has the potential policy of a tax holiday for corporates, which Trump has advocated, impact dollar issuance to date?
Sure. So last year we had a record year for issuance in the dollar market, and a lot of people were calling for lower issuance this year, partly as a result of those potential tax policies as people repatriate cash, and also the tax advantages of debt issuance are removed, as well as in a rising rate environment as the Fed looks to hike rates. That's not materialized. We've actually seen issuance at a faster rate than last year. We're up about 10% on the year generally, which has taken the market somewhat by surprise.
Right. And you were very busy last week with Volkswagen. What can you tell me about that new deal?
Sure. So in euros, Volkswagen issued a four-tranche deal, the first deal since the emission scandal broke. So obviously, market participants were focusing quite heavily on it and the implications for the wider market generally, demand for primary issuance and also for VW also. So they got 25 billion worth of orders for a $5 billion total issuance. So just over 5 times covered the deal. So obviously very strong demand, indicative of the amount of cash on the sidelines ready to be invested. The deal was quite aggressively tightened from initial price targets and then traded very well in the secondary market as well, tightening a further sort of 10 to 15 basis points in the longer tranches. So it's a very strong demand.
And have you found central banks buying of euro and dollar bonds? Have you found that has improved liquidity?
Sure. So central banks have been active for quite some time now, particularly in euros. That has contributed quite significantly to liquidity as market makers use the facility as a sort of risk management tool. That's led to a tightening of spreads generally and overall yields. In sterling, the Bank of England programme was taken somewhat by surprise. As a result of Brexit, they introduced the programme very quickly. 10 billion over 18 months was the initial target, and they've been running at quite a decent pace at the moment. So we're a bit ahead of target. In fact, they've got 8.9 billion by last count. So the programme is going to be ending relatively soon. And it'll be interesting to see how the market reacts, as market makers obviously been using it as a tool to manage their risk, and some bonds are trading very near record tights. So should there be any selling pressure, particularly in the context of Article 50, some sterling bonds could widen quite materially.
Great, Chris. Thanks very much for coming in. And that brings us on to Article 50, which will be triggered by British Prime Minister Theresa May on Wednesday. This will obviously be a key focal point for markets as negotiations shift towards the UK's access to the European single market. Europe, of course, being the UK's largest single trading partner. Much will be written about Brexit over the course of the next 2 years. Much will focus on whether the UK avoids a hard Brexit and whether the UK will revert back to WTO trading rules. With that, I'd like to thank you for joining us and see you again soon.